People talk about a potential crash, if you will. I honestly don't see that happening. Are you dreaming of owning your first home in the next year? Well, guess what? Wait no more, because the Federal Housing Administration, or better known as the FHA, has recently made some changes to their income requirements, and that can impact your eligibility. Whether you're on track to meet your goals or you need to make some adjustments, I'm here to guide you through that. So let's dive right in. Hey there, I'm Jairo Rodriguez, your trusted real estate advisor from Montclair, New Jersey. And if you're here as a first-time home buyer, or you're just interested to see what's going on within the market or the industry, well, you're in the right channel. Today, we're going to talk about the brand new FHA income requirements that have been changed in 2024. And these updates are critical if you're planning on using an FHA loan. So stick around to find out what's changed and how it can impact your journey. So you might be wondering, what is an FHA loan? An FHA loan is a federally insured loan by the Federal Housing Administration. Now, these type of loans have been specifically designed for low to moderate income borrowers who may not necessarily have a strong credit history or might not have a substantial amount of savings for the down payment. Well, why is it popular among first-time home buyers, you might ask? Well, one of the biggest things is that it's a lower down payment option. The biggest draw to it is that you're able to purchase a property with only 3.5% down of the purchase price, right? That makes it easier. That sounds really great, right? Another thing is that they're a little more lenient when it comes to the credit requirements. Unlike conventional loans, which often require a much higher credit score, typically a score of 580 or above will qualify you for an FHA loan. Another thing that makes it popular is that they're a little more lenient when it comes to their credit requirements. With the FHA loan, you can go down to a 520, and there's even some lenders that might be able to go down to a 500 credit score. So that's a little more accessible to a larger population. The FHA loan allows you to have a higher debt to income ratio, meaning that you can spend a larger portion of your monthly payment on the mortgage, making it easier to qualify even if you have other debts. So why don't we summarize the income requirements? 1. There's no minimum income requirement. So although the FHA doesn't have a set minimum number, a buyer or a borrower still needs to show consistent employment and income for at least 2 years. The maximum DTI the FHA will allow is generally 43. However, some lenders may be willing to go up to 50% depending upon how much down payment you're willing to put, right? If you're willing to put in more money, they're going to take that risk. They'd be willing to take that risk, if that makes sense. And then there's the manual underwriting. For those using a higher DTI or maybe borderline credit, loans may go through a manual underwriting process where the lender takes a closer look at your financials. And what is the significance to these requirements? Well, 1, your eligibility. Your income to DTI plays a crucial role for your eligibility. So even without a minimum income requirement, lenders need to see that you have enough income to cover the mortgage and other expenses. So let me give you an example. If a borrower in 2023 had a debt to income ratio of 48%, at that time, they would have possibly been able to get a loan still and close on a house. With the new requirements, it's a little bit stricter, keep in mind, right? There's other factors that go into it. So that's kind of one of the changes that you need to be aware of so that you can be prepared and be ready when it's time for you to make that purchase. Now, 4 ways that you can prepare and improve your chances. 1 is improve your credit score. If your credit score is hovering around that 580 range, try to get it up to 600, right? You have a couple months. Contact your lender, see what your lender can see on your credit report, on your finances that you can potentially eliminate or that would kind of get you to that 600 point, because that puts you in another bracket and it can help you not only qualify but also get a better rate, if you will. 2, increase your savings. If you're able to put more down, that ultimately is going to help you qualify even better, right? At the end of the day, the lender is going to want to take as less risk as possible. So that's an opportunity for you to kind of step your game up and show that you really want this to happen. 3, reduce any debt that you may have. If your balance on a car note is low, maybe you can pay that off. See what credit cards you have that you could potentially pay off. Again, contact a financial advisor or a lender, somebody that's willing to work with you. Look through the things and help you kind of assess or address the things that you can. You may also want to consider another option. It doesn't have to be an FHA loan. You have some conventional loans that are pretty aggressive, right? Depending again on your credit score and your income and all that stuff. I've seen in the past, and they may come back around, where there's conventional loans that allow you to do a 3% down payment. So it's possible. Keep your mind open. Continue to speak to professionals that will advise you and guide you in the right way. And as always, I'm always here to help. Don't forget that. So let's talk about the bigger picture. At the end of the day, you're hearing people talk about a potential crash, if you will. I honestly don't see that happening. We are at historical low levels of short sales and foreclosures, which ultimately that's really what helps drive the inventory and put more supply into the market, and we're not at that level right now. Now, what we're seeing, you'll see as the election cuts closer, interest rates are continuing to drop. We're in September now, and we're still seeing them drop. They were, sevens. Now we're at sixes, and we're expecting them to hopefully reach high fives. But when that happens, the buyers that are on the fence are gonna come out, so you're gonna have more competition. And that's that, guys. Thank you for tuning in. Remember that understanding these new FHA guidelines could be the difference between getting approved or having to wait another year. As always, I'm Jairo Rodriguez, your trusted real estate advisor in Montclair, New Jersey, and I'm committed to helping you find the perfect home while making sure you're financially ready. See you in the next video. Don't forget to hit subscribe, drop your questions down in the comments, or contact me directly. I'm here to help.